All right, good morning, everybody. Mark gets a tardy. Yeah, he does. Sorry, Mark was making money. Apologize. I'm a day trader too, guys, and I had to get a little bit there. So it's all good. How's everybody doing today? Nice to see you guys. I am going to get things going. Man, NASDAQ has been making you be patient, haven't they? Guys, I want to see your pictures. I want to see your annotations. I want to see why you're doing what you're doing, right? Good morning, Jose. Good morning, E. Good morning, Zeba. Good morning, Safia. Good morning, Ron, Bobby. Who else said that? Sure do appreciate you guys coming in. Um, for those of you that are brand new, let me do a real introduction here. And I know that we have new people in the room. I'm Mark Novak. I'm John Novak's younger brother. I spent 30 years in the service industry, was doing real well with it, had a good time. Hey, Mike M. Um, had my second spine fusion and had to change careers. And the career that I chose was to be a day trader. So I started brand new, just like everybody in this room. I started with zero knowledge, just like everybody in this room. I started with no understanding of Fibonacci, just like everybody in this room. And then, just like you're going to get in this room, I had a path laid out before me, guys. I had, from John Novak, from the creator of the software, he literally said, Mark, I can get you exactly where you need to be. This is what I need you to do. I need you to post your trades in class. I need you to track your real-time performance in a spreadsheet. He goes, you're going to take pictures and you're going to post them and you're going to get feedback, and you and I together are going to get you exactly where you want to be. Guys, I don't know how you are, but I'm a little arrogant. I'm cocky. I'm very confident in most things that I do. And in most things I do, I find success easily. And it kind of broke me from becoming a student. I didn't allow myself to be a student. I decided that I was too smart. And I'm going to tell you guys right now, it kicked my ass 32 days to Sunday. It killed me because what I didn't do is I didn't take pictures. I didn't post pictures in the class, right? And then when I did post pictures in the class, I only posted winners. I was showing off. I was showboating. I was, hey, look what I did. Look what I did. And then one day my brother saw a post where I had won like $700. And I was such a badass. And I was so just, man, look at me, look at me, look at me. And my brother pointed out my P&L and I was down $1,100. And he goes, so Mark, why don't you tell me about the $1,800 that you lost? Because that's where the lessons come from. Why don't you tell me about all these losses that you took that you decided not to show me rather than showing off the one that you got right? And man, it was a kick in the clackers and it just refocused me. And what I realized is that I had made the decision to be a day trader, but I'd also made the decision that I didn't want to do any of the work that it takes to become a day trader. And my results were reflecting my inability to follow the plan put before me. So I recommitted, guys, and I recommitted and I started posting every trade in the class. And what happened is by posting trades in the class, I began to recognize patterns in myself, and John Novak began to recognize patterns in me. And we worked together to correct those patterns. One of my biggest challenges was I was trading into um, termination conditions, and together we worked on it, and he helped fix me, and he gave me some advice on how to fix it. Not trading advice, but how to get out of that little hole that I dug for myself. And I started using the spreadsheet, guys. I started taking pictures of everything that I did, whether it was a trade, whether it was a chart read. And I use this spreadsheet every day. And guys, the original spreadsheet had 279 lines on the first page, 279 instances where you could place something. I still remember the number. And I filled it up 4 times, 1,000 trades, taking pictures, 1,000 trades, annotating charts, 1,000 trades, creating recognition through repetition. And I took a lot of pictures of my rules being met, but I also took a lot of pictures of my rules not being met. So I committed myself, I recommitted myself to following the path, guys. In the classroom, I'm going to teach you the trigger line and the Fibonacci rules for when it's okay to trade, and I'm going to keep it simple. I'm going to keep it so simple, and I'm going to, on bended knee, beg you guys to do the same, to keep it simple, to focus on the absolute best, to make sure that you can consistently trade a plan that gives you a higher chance of success. And that's what we teach in the room. We teach a high probability trend trade. We teach a trade that typically wins 70 to 80% of the time. Um, One of the other pitfalls that I had, guys, is when I started, there was a room and there was a gentleman named Siva, and he appeared to win every trade. So I tried to trade like Siva, and I got my butt kicked, and I lost all the time. And then there was a nice gentleman named Janesh, and I tried to trade like Janesh, and I got my butt kicked. And then there was about 20 other people who I tried to replicate, who I tried to mimic, who I tried to be, but I never put into the equation that these guys had been with Nexgen for a decade, for 12 years, for 8 years, for 10 years, right? And I didn't have the experience to do what they did. So I had to take a deep breath and eat my humble pie. And I had to say, well, I've got to keep it simple if I'm going to do well. And guys, I see this all the time. I see people watch John Novak for 3 hours and then they decide that they're going to be a momentum trader, but they have absolutely no idea what they're doing. Um, and I watch people go, well, Next Gen Ben is making a bunch of money jumping in, but they have no idea. And then the most profound thing, two different people told me this. They said if you don't have a plan written down, if you don't have a concrete approach to what you're doing, well, then you just don't have a plan, which means that you're trading through emotion, you're trading through your gut, and what you're doing is you're setting yourself up for failure. So, guys, I've made all these mistakes. My sincere hope is that I can keep you from making some of the mistakes that I made. So let's go through how to do that, guys. And it's up to you whether or not you want to follow the path. If you decide to fight it, that's cool. I still love you. I'll wrap my arms around you and I'm going to do my best to help you. But you can make life easier on yourself. Post your trades in class, everything. Write on your chart. Write your rules. Own them. These are my rules for this trademark. This is what I did. Is there anything I can do better? And you and I will have a conversation about everything that you do. Use the spreadsheet, guys. Every time you take a simulated trade, put it into this spreadsheet. I'm going to give you mine right now because a lot of you are like, well, I can't find it. Well, there it is. If you can't find it, you're not looking. It's in the Next Gen Study Picks folder. Every trade you take, put it into a spreadsheet. Every one of you that's posted a trade in this room, this should be in your spreadsheet. It should talk about the conditions. It should talk about whether or not you followed your rules. It should talk about the result. Tomorrow when you wake up, you're going to set aside 10 minutes and a cup of coffee to look at what worked and what didn't work and what kept you relaxed and what kept you nervous, right? And a brief historical study each morning is going to set you up for success, guys. It's going to accelerate the learning path and it's going to get you to where you want to be. Good morning, John Novak. The second page of that spreadsheet is where you're going to take pictures of your rules being met. You're going to write your rules down, you're going to stare at them, and every time you take a trade and it fits your rules, you're going to take a picture, guys. And what that's going to do for you is that's going to put you in a position to where these looks become easy because you are going to understand the looks through repetition. You're going to simulate, you're going to post in class. When the rules are met, when we talk about your rules being met, you're going to create a file so you can go back and look at 10 pictures every morning. This is exactly what I'm looking at. Using market replay, retrading the day, fixing your mistakes, guys, that's key. Doubling your repetitions because the only thing NextGen can't provide you is experience, right? You've got to go out and get that yourself. I'm going to give you feedback on your experiences. We're going to focus on one trade. You're going to learn the rules. I'm going to give you all the tools you need to be successful. Guys, I want you to make the decision right now. I want you to commit to simplicity, commit to making money the easy way before you go chasing everything, because that's exactly what I'm going to give you. Is I'm going to give you a high probability trend trade. And this high probability trend trade is a trade that typically wins 70 to 80% of the time. This is a trade that combines advantages to put you in a position to get into a trade where everything agrees on every chart. And this high probability trend trade is going to teach you to read your charts. Guys, your chart reader, 90% of what you do during the day is reading charts. I watched the NASDAQ for an hour and a half this morning before my rules were met to take a trade. An hour and a half I sat idle and I read my charts and I took the information, and then finally I took my entry. That's why I was late to class. Your chart reading is going to give you three very important abilities, guys. You're going to understand where the market is likely to continue. You're going to use these continuation points initially for a high probability trend trade, for a trade that typically wins 70-80% of the time. You're going to use that entry ultimately for maybe medium probability trades, for high volume area trades, and yes, even for momentum trades. But if you don't have a solid understanding, that foundation in place, all those other trades are going to become difficult. You're going to understand where the market is likely to go, and that's going to help you make good decisions on targets. It's going to help you hold longer. It's going to help you get out sooner. Understanding where the market is likely to go is all about management. And then finally, you're going to understand where the market is likely to stop. And this is a big red flag telling you that the trend that you're trading may be ending, that the market has reached an area that these deep pockets investors are going to react to. It may create a bounce, it may create a reversal, but these likely to stop areas are going to keep you from taking that last trade that takes back the profits that you made getting to that area. And this likely to stop area, this termination condition, when it reverses the market, sets you up for the highest probability trend trade you can take. This high probability trend trade that we're going to discuss that happens after a termination condition is a trade that typically wins 70 to 80% of the time. Write that down in front of you. Say, what if I were trading a plan that typically won 70 to 80% of the time? Would it be worth it to be patient? Would it be worth it to sit on your hands? Would it be worth it to not take a trade when the rules aren't met? Guys, you have to understand that this is what professional day traders do. They sit and they wait until they have a statistical advantage. They're not in the market every second of every day. So we're going to focus on this trade, guys, this one trade, this high probability trend trade. This trade that consists of only three rules, three simple concepts that provide three advantages. These three advantages are the recipe for a trade. When you have momentum, when you have a clear path, and when you have an entry area, that place where the market is likely to continue, you have a high probability trend trade. And these three rules, we're going to break them down individually. We're going to look at them, what they look like on a chart, but we're also going to associate the rules, the words with the picture. They're going to happen on only two charts. You're going to use a large chart, and this is going to be a broad stroke of a brush, guys. This is the overall opinion of the market. This is what the people in charge think should be happening. It's going to define your direction. It's going to define your momentum, and it's going to define the areas that you have to respect. Your first two rules are going to come to fruition on this chart. You will have the advantage of momentum as well as a clear path before you ever turn your eyes to the smaller, faster chart, your entry chart. And the smaller chart, this is going to refine that broad stroke of a brush. This is going to take 1 bar's worth of information and break it down into 15 to 30 bars. And from that 15-30 bars, you are going to identify the point where the market is most likely to continue. This is going to be your entry point. By doing this, by taking this 1 bar on a large chart and breaking it down, expanding it on a smaller, faster chart, you are going to put yourself in a position to have less risk on trades. You're going to put yourself in a position to have more manageable trades, to be able to take these small pullbacks that you'll never see on a large chart, to create more profit on the smaller chart. And your rule number three out of 3, is going to give you that advantage of an entry area, that point where the market is most likely to continue. So this is as simple as we can ever make it, guys. 25 years of refinement, 25 years of study, 25 years of teaching people to become day traders has whittled itself down to 3 rules on 2 charts to give you a solid foundation to take you to any level you want to get to as a trader, but it's going to teach you to read your charts. So let's embrace simplicity this morning, and let's focus on the advantages. Let's have a good time today. Let's see a lot of pictures. Rule number 1, happens on a large chart. It says that the large chart must have strong triggers. So I'm going to go to rule number 1 right from the tutorial section, and it says T3 trigger lines define the trend. Hey, good morning, Sam. And guys, they define the trend by changing the color of the background. If the background on your large chart is green, you're in an uptrend, and you should only be looking for rules to be met for high probability trend trades long. If the background on your large chart is red, you're in a downtrend, and you should only be looking for rules to be met for high probability trend trades short. Hey, good morning, John P. This isn't one of the advantages that the rules provide, but this is one of the advantages that you can give yourself in any scenario. Trading with the trend, right? Funny story time for you new people. John Novak had a broker once, and the broker told him, he said, hey, Mr. Novak, I can guarantee you, which is a word that the brokers don't use very often, I can guarantee you $1 million in your trading account by the end of the year. And John Novak said, well, absolutely. How am I going to get $1 million in my trading account by the end of the year? And this broker said, with the straightest face ever, he said, I need you to identify the trend and then fight it every chance you get after you fund your account with $3 million. By the end of the year, you should be down to $1 million. And it's a funny little joke, but it is a true story. And it's a funny true story. Guys, give yourself the advantage of trading with the trend. And then once you've identified that trend, let's make sure that we have strong triggers. And strong triggers are defined by the small triggers and the large triggers working together. Your small triggers are two lines, two solid lines, but they act as one trigger, right? The large triggers are two lines, both dashed, but they work together. Your small triggers are the two, your large triggers are the two. And when there is a separation between small and large, when they're both wide and angled in the direction of the trend, that space between small and large lets me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is a phrase that you're going to hear in class all day long, and odds favorable momentum is going to camouflage other mistakes that you make during the day. When I have this absolute best of the best look, this strong trigger look, this odds favorable momentum, this is when it's the most favorable to use that smaller, faster chart to buy a pullback to Fibonacci support for continuation of the trend with the momentum. In a downtrend, smalls below the large are wide, they're angled in the direction of the trend. It is the space created between small and large that lets me know that the odds are favorable for the market to continue down. Guys, this is your advantage, and when you have strong trigger lines, you have the advantage of momentum. And that advantage of momentum is going to carry you to the next level more often than not. So when you're talking about the trigger lines, you're talking about those strong triggers from the point of separation where the smalls break away from the large until the smalls return to the large. Because when the smalls work their way inside of the large, we call this a weakening of the large triggers. It's the exact opposite of strong. And you go from odds favorable to continue with the direction of the trend to anything can happen. Weak triggers typically precede a turn in the market. Weak triggers can create bounces that are untradeable. Weak triggers don't give you that advantage of odds favorable momentum. So we're going to look for opportunities from the point of separation until it returns. And there's a couple of those pullbacks, a couple of those potential entries on a smaller, faster chart. And the same thing down here. Separation, coming down, looking for those opportunities, and then being okay with sitting on your hands when the advantage goes away. So guys, I'm going to ask, especially new users, is everybody okay with the idea of odds favorable momentum leading the way? Those strong trigger lines are the first advantage that you're going to provide yourself when you're looking for a trade. Anybody? Everybody's got it perfect. I love that. So once the momentum is there, once the advantage is had, it's time to look for termination conditions and make sure that I have room to my profit targets to make sure that I'm not trading into an area that's likely to stop the market. And that's exactly what a termination condition is. It's a Fibonacci-based indicator that may reverse the market. And these termination conditions are a simple comparison of the areas to those T3 trigger lines, to the same lines that gave you momentum. And the areas can be divergence highs, that magenta line that prints from a pivot when there's a loss of momentum, or divergence lows, the cyan line that prints from a pivot when there's a loss of momentum. It can be red Fibonacci resistance or blue Fibonacci support. And it can also be these yellow 1-to-1s. Guys, these are the areas that the deep pockets investors, these are the areas that the institutional traders recognize long before they ever get to them. These are the areas where they're looking to take profits. These are the areas where they're looking to enter trades. And Nexgen users, you have the advantage of seeing these areas long before the market ever gets there, because they're in place, they're established, and you just need to determine whether or not it's likely to stop the market. And you're going to do that with a simple comparison. Two things have to happen. The first thing is price reaches an area. And when I say price reaches an area, I mean that these dynamic Renko bars, your price bars, come down and in this case reach Fibonacci support. Once price reaches that area, all you have to do is ask yourself, where are my trigger lines? If support has been reached and the trigger lines remain above support, you've reached an area that may stop the market. You've reached an area that may create an untradeable bounce. You've reached an area that is more than likely going to be reacted to by those people that control the market. If you reach an area, no trigger lines go through, guys, no trade. Rule number 2 has not been met. You do not have the advantage of a clear path. It's time to sit on your hands and wait. Either the market is going to reverse from this key area, or it's going to break and the trend will continue. And these areas of support, you can see it up top, are considered broken when both the small and the large triggers get to the other side of the area. So price reaches support, sit on your hands. It's either going to reverse or it's going to break. Small and large triggers break through. Support is now broken. It begins to act as resistance. It's still a key Fibonacci area. You can see that there's odds favorable momentum. And there's one of those tails, one of those potential entries right off that resistance area to take you down to the next level, where the market may stop, when the path is clear, where the market may continue, where the market may go. You're going to be able to take these simple recipes and create a trading plan that revolves around it. Price comes down. Divergence prints off a pivot. This is not a termination condition, guys. This divergence line does not print until about the third bar. It's when price reaches the area and the trigger lines remain above. Now I have a termination condition. This termination condition is called a pivot stop out of a prior divergence line. And this is a great termination condition. And if it creates a full reversal in the market, if those large go from red to green, the small get above, it gives me odds favorable. This is what we're going to call a strong bottom or a good bottom. And strong bottoms are going to be the precursor to the highest probability trend trade that you can take. A high probability trend trade that happens after a termination condition that creates a full reversal is your 70 to 80% winner typically. Pivot stop outs can happen at highs. Market reaches resistance, absolutely no trigger lines break through. We're not looking for long trades anymore. We've reached an area that may create a bounce, that may stop the market in its tracks. In this case, it pushes all the way back to support, and the trigger lines don't break support. 90% of what you do during the day will revolve around reading your indicators. 10% will be taking those advantages and turning them into trades. When the market comes back up to resistance to that divergence high, notice how none of the trigger lines break through. Visually, this lets me know that I'm not going long even though my triggers are green. And when this termination condition, this pivot stop out of a divergence high, coincides with Fibonacci areas, it creates an even stronger top. And when this stronger top creates the full reversal provides me odds favorable momentum. Guys, there's one of those tails, one of those potential entries for the absolute highest probability trend trade that you can take. Price reaches 1-to-1s, trigger lines don't break. No more short trades. Look at the reaction of the market to that key area. When this termination creates the full reversal, gives me odds favorable momentum, and look how it has to clear resistance so it behaves as support. I now have a clear path and odds favorable. There's one of those pullbacks that we're going to locate on a smaller, faster chart, providing us the absolute highest probability trend trade that we can take. So guys, I'm going to give you a picture of termination conditions from a high. It has the recipe written on it. I want you to embrace the idea that when price reaches an area, you have to do that calculation. Where are my trigger lines? Here's the exact same looks from lows, and this becomes your study material. Identifying the trend is easy. It takes a second. Identifying strong triggers will take you maybe 3 minutes tops. Go back and study these termination conditions. Go back and take a look at your larger charts and see how many times termination creates a full reversal, gives me odds favorable. I was in that trade. I hope you guys were too. Price reaches support, no triggers break through. Look at the bounce that occurs. Support holds, reverses the market. Over and over, guys, support holds, resistance holds. You can see that channel that's created, and then the market ultimately continues up off of support. Support holds to the tick. 1-to-1s hold to the tick. Guys, this happens all the time. Your job is to study it, to recognize it, to make sure that you can go through this simple recipe. Price reaches an area, where are the trigger lines? Do me a favor, give me a Y in the room if you're with me on this. Price reaches, triggers don't break. There is no trade, guys. I'm telling you, this is one of the most broken rules. This is the rule that costs new traders more money than any other trade. This is the rule that absolutely destroyed me as a new trader because I refused to believe that an area could possibly hold. So keep it simple. No triggers through, no trades. Sit on your hands. Wait to see what happens. Small and large break through the area. There's that odds favorable momentum. There's your potential trend trade heading off into the distance, guys. And then there's going to be one more scenario, and I'm going to go ahead and talk about this now when we talk about termination conditions. Strong trigger lines, odds favorable momentum is hard to stop. It's like a freight train, right? It takes a train a mile to stop from like 40 miles an hour because of the weight, because of the momentum. When your small triggers, both lines of the small triggers, get through an area, but your large triggers haven't made it yet, guys, this is what we call a 50-50 look. And it's a 50-50 look because 50% of your trigger lines are through the area, 50% are not. It has nothing to do with your odds of success. It has nothing to do with the odds of winning the trade. It's simply a reference to trigger line location. You could call it a one above, a one below trade, or you could call it a straddle trade. You can call it whatever makes you feel good. But when the smalls break through and the large don't, and I have odds favorable momentum, I have the absolute strongest trigger look that I could ever hope for, this 69.80 area has the potential to break because of the momentum. But it's not a clear path because it hasn't broken. And I know from my 3 simple rules that in order to take a trade as a brand new user, in order to have the advantage as a brand new user, I'm relying on that clear path coupled with the momentum to have me look for an entry. So if an area has the potential to break, it's no longer a high probability trade. It's no longer a foundational trade. It goes into what we call a medium probability trade. Ladies and gentlemen, this will be your second trade that you look for. A medium probability trade is defined when most of your indicators line up for a trade, however a small issue exists. Your small issue is going to be that this area has not completely broken. When you forfeit the advantage of a clear path, it's imperative that you do not forfeit momentum. It's imperative that you do not forfeit an entry area. And these medium probability trades are going to have to be managed assertively. They're not home runs. Sometimes they're taking quick little snippets out of the market, making small profits, getting to a zero loss level. And these 50-50 trades are going to become a part of your trading plan when you build that foundation. Notice here there was a 50-50 trade. Smalls had broken through and the large did not. Something changed, and that area ultimately doesn't break. Here you have a 50-50 trade, and the area does break. The momentum remains constant, and there was probably a tight little area where you could take an opportunity on that smaller, faster chart. So guys, 50-50 trades are great trades, but in the beginning, what I really want you to do is I want you to focus on the best of the best. I want you to give yourself the highest chance of success, and I would love to see you guys commit for 20 days. You either have a clear path and it's time to look for a trade, or you don't have a clear path and you sit on your hands and you wait for either the path to clear or for the market to reverse, and those are your two options. These are large chart termination conditions. These are large chart references. And D, thank you for the Y in there. You were the only person on demo that answered whether or not you understood it. Guys, the rest of you, if you're hoping to soak this up through osmosis, it's probably not going to work out for you. Use your voice, guys. One more termination condition. This one's going to happen on a small chart. This is the only termination condition that I'm going to respect on a small chart, guys, and it is going to be a way for you to identify change on the large chart that you don't see in the moment because it's so slow. And it's using those divergences. It's using those losses of momentum. And those losses of momentum, when these divergence lines print, 3 divergences in the same location may terminate the trend. 3 losses of momentum in the same price range may terminate the trend. It becomes more powerful when your small triggers work their way inside of the large triggers. We're taking that foundational lesson of momentum from rule number 1 and we're applying it on a smaller, faster chart. Rakesh, let me give you a picture. Your large chart is where you're looking for termination conditions. Your large chart is where you are comparing areas and trigger lines. Give me a Y if that's good. Your large chart is that comparison. Price reaches an area, where are my trigger lines? You comfortable with that? So Rakesh, the only termination condition that I'm going to give any credit, any weight in this world is 3 divergences on a small chart. That's the only time I'm going to look at a small chart. 1, 2, 3 divergences may terminate the trend. So this becomes an opportunity for me to 1, not take any more short trades, or 2, manage out of an existing trade because that market may be changing. And you're going to see this look from a low and this look from a high on a smaller, faster chart when the large chart appears to be turning from nowhere, not from an area. Even with odds favorable momentum, 3 divergences in the same location may terminate the trend. So Rakesh, everything starts on the large chart. Everything begins. Your comparison of areas and trigger lines, your recognition of momentum, your defining of the trend, all of that is going to happen on the large chart. This is the only termination condition that you may be able to use on a small chart, and it's going to become a management tool, especially for you guys that are looking for those 50-50s. So we have strong triggers, odds favorable momentum, right? There's your first advantage. We have no termination conditions. Price has not reached an area on the large chart. There aren't 3 divergences on the small chart. We have the advantage of a clear path. Guys, now it's up to you. We're going to find the area where the market is most likely to continue. That's our entry area. That's rule number 3, and rule number 3 happens on that smaller, faster chart. Rule number 3 says that we're going to use a limit order to buy or sell a pullback, which means that we're looking for a small retracement in price that's counter to the underlying trend. If everything says up, We're going to let it come back to us on the smaller, faster chart. Remember the refinement process. On a large chart, if everything says down, if the momentum is down, if the trend is down, if the path is clear to the downside, we're going to sell a pullback, a small retracement in price counter to the underlying trend. And we are going to sell that pullback at an area inside of favorable large triggers. So we're going to define favorable large triggers first. Favorable large triggers means on your small chart that both your large and synthetic triggers are overlapping. They're one on top of the other. They are wide. They are angled in the direction of the trend. Favorable large triggers need to be wide and angled in the direction of the trend. Favorable large triggers need to be overlapping one on top of the other. And this is the look that's going to give you the smallest amount of risk getting into every trade. This is the look that's going to give you the smallest window of opportunity, the smallest point where the market is likely to continue. And I want you to burn this look into your head, because when they're overlapping, life is easy. When they're separated, when they're spread, when they're split, your risk goes up exponentially, and it becomes a little bit of a guessing game on where that market's likely to continue. When your rules are met, this is the look on your 5-1 chart, and your smaller chart. You should have strong triggers. Your small chart should have smalls outside of the large. The large should be wide. They should be angled in the direction of the trend. We are embracing the idea that momentum is the first thing that we look for. Your large triggers and synthetic triggers should be both angled in the same direction. They should be up. They should be strong in this uptrend. And this is where you've made the decision. It's time to look for an entry. So what we need to do is we need to identify our areas that may fall inside of these favorable large triggers. Every high probability trend trade comes from a line, and those lines can be fibs, they can be mid bands, they can be yellow 1-to-1s. Fibonacci support in an uptrend, green midband in an uptrend, yellow 1-to-1s. And they should be inside of those favorable large triggers. But our rules say that we're going to buy a pullback, which means that we want the small chart to come against us. We want the small chart to literally turn against the direction of the trade, and that begins with a reversal bar. After all of these up bars, we're looking for a reversal bar. This reversal bar says, hey, we're probably going to try to come back to one of those key areas inside of favorable large triggers, and you're going to be able to create a window of opportunity, an area where the market is most likely to continue. For a long trade, it'll go from your highest point of support to your lowest point of support inside of favorable large triggers. For a short trade, it'll go from your lowest point of resistance to your highest point of resistance inside of favorable large triggers. This box becomes the area where the market is likely to continue. This box represents the point where your entry comes from. Your job is to right-click at the top of that window. Because of the momentum on the 13.2 on your large chart, because of the clear path on your large chart, the expectation is that we can't slow down that freight train, so we're going to try and make sure we don't miss that move, that we don't miss that trade by having a limit order waiting at the top of the window. And at this point, only one of two things are going to happen. The market's either going to continue without you, and that's a very real part of trading. Sometimes the money that's getting made isn't your money, or the market's going to come back to this area inside of favorable large triggers. And let's define that window. From the top of the triggers to the bottom of the triggers, right? This is where I'm looking. But the rules say that we're going to buy a pullback at an area inside of favorable large triggers, which means, and I'm going to shade this a little bit, from my highest point of support, whoops, let's turn that down. From my highest point of support, the midband, to my lowest point of support, those yellow 1-to-1s. Guys, this becomes the window of opportunity. Give me a Y in the room if you're with me. We've identified areas. They have to be inside of favorable large triggers. This is where the market is most likely to continue, guys. This is where your advantage comes into play. And as that market comes down and it doesn't quite reach the window, look at that fluctuation on a smaller, faster chart. A lot of you are going to take that entry. And if you take this entry, look at how far away from those areas that you are. What I want you to begin to do is trust that more often than not, the market comes to the top of that window. And 79.21 is your entry. This is your best of the best spot. This is where your limit order is waiting. And if you're in this trade now, you're in the trade with the advantage of momentum. You're in the trade with the advantage of a clear path. And you're in the trade having entered at the point where the market is most likely to continue. This is your high probability trend trade. Couple things I want you to think about. We created a window, right? It may go to the bottom of that window, and that's okay. It's okay to watch the trade go a couple ticks against you. It's okay if it remains in the window because we still have the advantage of an entry area. However, anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Losses are a normal and natural part of a positive equity curve. And I guarantee there's not one person in this room, even successful traders, that don't take losses. But we manage our risk. And I said this yesterday, I'm going to say it again today. We're going to manage our risk before we ever manage our profits. We're going to manage our risk by having momentum. We're going to manage our risk by having a clear path. We're going to manage our risk by identifying where the market is likely to continue. And we're going to manage our risk by putting a protective stop outside of that window, below where the market should not go. Because if it goes beyond the window, the rules aren't met, and we're okay getting out of this trade. This becomes a cost of doing business. But this is a trade that I'll take 1,000 out of 1,000 times, because 70 to 80% of the time in this highest probability trend trade, this is my most likely outcome, profit target reach. Once the trade begins to move in the direction, I'm going to put a reversal bar beneath, or I'm going to put a stop below the reversal bar that headed that direction. Guys, this is your highest probability trend trade. This is your best of the best. What I need you guys to do over the next few days is study it. I want you to look at your large chart, strong trigger lines, no terminations, rules 1 and 2 are met. And if you have one of those tails, I want you to circle it. And if you circle that tail and it lines up with an area of support for a long on your small chart, you have a high probability trend trade. Burn this image in your mind. Take a picture, post it in class with the rules written on it, put it into your spreadsheet. This is your best of the best. We do not trade tails on the large chart. We trade pullbacks to areas inside of favorable large triggers on the small. This area predicts where this tail is likely to happen. Guys, that's your study tool, and you can take 10 days. 10 days. This is the NASDAQ. Man, it's been moving, hasn't it? Let's just look at one. Let's circle a tail and see what it looked like. And I know we're posting in there. At 9:29 a.m., I'm circling a tail. And if I scroll back to 9:29 a.m., my gosh, there's been a lot of movement, hasn't there? At 9:29 a.m., it pulls back to an area of resistance inside of favorable large triggers and continues for what is a sizable winner. Approximately 14 ticks, $280. Guys, this is how you're going to study. Take this picture, use your capture software, use your Snagit, whatever you're using, and then annotate it. And I want you to do it like this. Rule number 1 says odds favorable momentum. Type it, point it. Rule number 2 says no terms. Type it, point it. And then rule number 3, and this is the most important for you guys. Rule number 3, I want you to write it out every time. Pull back to an area inside of favorable large triggers. And what you're doing is you're associating the words of your rules with the visual on the chart. And I want you to take this picture and I want you to drop it in the room and let's talk about it. Let's make sure that the rules were met. Let's make sure that it was the best of the best. Let's make sure that those advantages were in place, right? Because it's these advantages that are creating a trading plan that's going to give you your highest chance of success. And then when they are verified, when you do verify it, bring it to your spreadsheet, right? And call it perfect short, rules met, whatever you want to call it. And now what you're doing is you're creating this visual. You're creating this idea that when you have odds favorable momentum and it pulls back to an area inside of resistance or support, you have that highest probability trend trade. You can also take the picture. Guys, look at this. Price reaches support and absolutely no trigger lines break, even with odds favorable momentum. Who took the short? Didn't work. Anybody? Rule number 2 keeps you safe. It's designed to keep you safe. Guys, this is your foundation. This is your best of the best. This is how you're going to learn to read your charts. Many of you are going to break away from this. Many of you are going to say, I'm too damn smart for one trade, or I don't like sitting still for just one trade. That's up to you, right? But if you're committed, guys, here's a checklist to always get you in at the best of the best. These are the conditions that it takes for you to take an entry. Is the market coming from a good top or bottom? Is it coming from a termination condition that creates a full reversal? Here's a video attached to the checklist for you to watch. John Novak teaching you about good tops and bottoms. This is a must watch for new users. Never had anyone in the history of this checklist be able to check yes to everything and do worse than 70% winners. Guys, let that sink in. If you're really here to make money and not to stay busy, if this is going to be a source of income and not an adrenaline fix, doesn't it make sense to have a plan that gives you a statistical advantage each and every time you enter the market? At least as you learn to read the software, this is your plan. For those of you that are visual, here's the exact same checklist with pictures pulled from the resource material, showing you exactly what each element looks like in its singular fashion so that you can commit it to memory, so that these looks become easy. Recognition through repetition. There's a copy of that one in there. And then guys, I'm going to give you this one. This is your simple plan for consistency. As a brand new user, 20 days focused on entries. That's it. 20 days focused on entries. 20 days of allowing it to be foundational. 20 days learning to recognize advantages. And guys, this is your path right now. The first thing you have to be able to do is understand what direction that market is moving. Red or green, up or down. Boom, the lesson's done. You're already brilliant at it. Then you've got to be able to identify momentum and understand that momentum gives you an advantage. Most of you, this is going to take you inside of 4 minutes to recognize it, the separation between the two. But then we're going to study a little bit. Then you're going to expand that large chart and you're going to see how many times the market bounces off these key Fibonacci areas. And you're going to begin to recognize what the conditions look like when they break. This is going to take a little more study, but most people will be able to recognize the termination condition inside of a couple days, and they'll be even better at ignoring it for the first month. And then finally, when you have the trend, when you have the advantage of momentum, when you have the advantage of a clear path, guys, this is where study becomes imperative. This is where you have to be able to identify that area inside of favorable large triggers. And when you can take this entry, when you can identify this entry, when you can get in at the right spot and you share these pictures and we talk about your recognition of the advantages, guys, now you have a high probability trend trade. Now you have a trade that typically wins 70 to 80% of the time. This plan revolves around putting you in a position to be successful, defining your entry and nothing but your entry for 20 days. There's the same checklist, guys. Commit to it. Every trade every great entry is going to require that you manage it, right? We can't just get into the market and hope for the best. We have to have a plan. If you're brand new to reading your charts, if you're brand new to reading your indicators, if you're brand new to trading the markets, you need repetition and recognition, and you've got to get your chart reading down a little bit so that you can manage a trade. So it has been proven that a mechanical approach to management, a pragmatic approach to management, right? An opinionless approach to management is best for new users initially because it takes your emotion out of the equation. Your initial stop is going to go outside of the window of opportunity. Your initial stop is going to go where the market shouldn't. At this point, there's nothing for you to do in the trades. You took the most beautiful entry that you could take inside of favorable large triggers. You have a stop where the market shouldn't go. You're either going to get stopped out of this trade, which is okay. It's a cost of doing business, right? For every 10 trades you take, you know that you're going to lose 2 to 3 of them. You just don't know which 2 or 3. That's why we put our stops in place. And it's either going to hit that stop, you're going to brush the dust off and get ready for the next trade, or you're going to get a reversal bar in the direction of the trade. And if you get a reversal bar in the direction of the trade, you're going to reduce your risk. You're going to go from outside of the window of opportunity to 2 ticks above that reversal bar. And now you're in a situation once again where there's absolutely nothing for you to do. You're either going to get stopped out for a small loser, and you will find that with this high probability trend trade, your losers can be considerably smaller than your winners, or it's going to reach your first target. And your first target is only $100 as a brand new user. And a lot of experienced traders try to jump me on this one. Mark, your risk to reward is all screwed up. Mark, I can't make any money with $100. Guys, when you hit $100 with every one of these advantages, nobody can take that money from you. That's your money. That's in your simulated account. It feels good. Your dopamine, your serotonin, it starts flooding your body. You feel happy. And you're going to move your stop to break even, which means not only did you make money, but you've got absolutely nothing to lose, which makes it easier for you to hold on, to trust that large chart, to see if the next target gets hit. So you're either going to get stopped out break even, which doesn't sting at all, or you're going to make it to that next target of $200. And if you do, on a 2-lot, a simple approach, nothing but advantages, pragmatic, opinionless, emotionless, if then, guys, that's a $300 trade. That's a $300 trade, and you set yourself up for success with the advantage of momentum, the advantage of a clear path, and the advantage of an entry area. This is your key to success as a brand new user guide, and this plan fits on less than a third of a piece of paper. Simplicity as you learn to read your charts. Simplicity until you're consistently winning more than you lose. Simplicity until you learn how to manage those trades. And every great entry creates a manageable trade. And what you're going to find is that from all of these entries in the green section, you're going to begin to work on a management plan. And we're going to work on it together through your posting in the room. And you're going to recognize that when the large chart has a clear path and strong triggers, it creates an opportunity to make more money. And you're also going to recognize that eventually, rather than going break even, you're never going to put stops inside of favorable large triggers when the rules are met for a high probability trend trade. All of these are just management pictures taken from class, and you're going to be able to take these medium probability trades, these 50-50 trades where areas haven't broken, and you're going to be able to recognize trouble spots and getting to a zero loss level and putting yourself in a position to be successful on trades that aren't even high probability trend trades. But it's imperative that you're taking pictures, and it's even more imperative that you're receiving feedback on everything that you do. Because if you're brand new, you don't realize whether you're making mistakes or not. And that's what I'm here for, and that's the magic of Nexgen, is for 15 hours every week I'm live to give you feedback. And when you post a picture in the room, Jose and I are now having a one-on-one conversation. Jose, termination, you're calling it an HVA trade, right? And then he realized that his rules aren't met. And then Jose and I are going to talk about when price reaches Fibonacci support, when price reaches a midband, and the large triggers are more than a full bar away, Jose, that's the gap theory, right? And it can't be an HVA trade because, Jose, HVA trades come from up right by that termination. Down here, you're hoping for a trend trade that lines up with an HVA line. Does that make sense? HVA trades come close to the termination condition. This is just an HVA line that you're hoping lines up with a trade. What you really have here is more of a momentum style, Jose, but there's that 21 again. Odds favorable, momentum to the upside, large triggers up, everything says up. If this isn't perfect for the short, and this isn't perfect for the short, Jose, at least let your entry be perfect for the short. Does that make sense? And guys, this is what we're going to do. Jose gets feedback. Jose can re-annotate his charts. Jose can recognize where the challenges were. But the biggest challenge for me, Jose, this gap theory alone keeps me from looking for this. It may still go down, but let it react, right? Let it react, let it come back to the large triggers, and then let it make a decision. And for my own personal trading, this look right here, this gap theory, and we're going to talk about it real quick, is one of the biggest bacon savers that I've ever had. And the gap theory, guys, is using those large triggers. And when price accelerates fast and far away from those large triggers, when it creates a gap larger than a full bar, price more often than not snaps back and closes that gap. We call this the gap theory. And it's like a slingshot. Price reaches this Fibonacci support. If my large triggers are a full bar away, it's likely to snap back, close the gap to those large triggers. Jose was nice enough to give us the absolute perfect picture of that. Price accelerates right to Fibonacci. The large triggers are a full bar away, and you can see how price closes that gap. Guys, this gap theory will keep you out of short attempts until the gap is closed. This will also be how you identify a midband as a termination condition. When the large triggers are a full bar away from the midband, that midband may act as a termination condition. And I think that if you scroll through, you'll see it quite a bit. Hits the midband, large triggers away, closes the gap. Midband resistance, large triggers away, closes the gap. Everything we do is patterns, ladies and gentlemen. Everything we do revolves around, look at this, resistance, midband, full triggers, full bar away, over and over, right into resistance, full bar away. Patterns repeat themselves over and over. Take pictures of these patterns, because it's going to keep you from trying the long trade here. And then when support holds, it's going to set you up for taking that next long trade. And sure enough, it closed the gap once again. Patterns, 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 guys. Notice that it closed the gap to the large triggers. So if you tried the long at the midband inside of the large while the synthetics were down here, you probably got run over. And the gap theory told you that that was most likely to happen. And then the market continues up. Pretty amazing, right? I think so. Termination condition, pivot stop out, creates a full reversal, provides me odds favorable momentum, and look how the market rockets. So guys, I'm going to backtrack just a little bit before my first break. And I feel preachy today, and I apologize for that. I want to remind you that if you're serious, right? If you're not just telling your wife you're going to be a day trader so you don't have to go find a real job, if you're serious, if this is how you want to make money, if you're looking for financial independence, if you've made the decision that this is your new career or this is your retirement so you can buy a bigger boat to live on, Post your trades in class and ask for feedback. If you're on day 1, post your trades. If you're on day 100 and you're still not winning consistently, post your trades. Guys, I'm here for you. I love looking at your charts. I love talking about your charts. And more importantly, I get absolutely giddy when I watch you grow as a trader. It excites me. It makes me happy. I'm like a proud papa. But you have to learn the trigger lines and the Fibonacci rules. And then here's the hard part is you have to commit to them. And you have 2 options as a day trader, guys. Are you ready? I'm going to give you the keys to the kingdom right now. 2 options and only 2 options. Either your rules are met, either your trading plan has been met to enter the trade, or they're not. In which case, the hardest thing you'll ever do is absolutely nothing when your rules aren't met. Ask anybody in this room that's been trading for a while. It's difficult to do nothing when the rules aren't met. This same trading plan moves its way into one of those 50-50 trades and how to take it and the best chance of success for a 50-50 trade. Once again, these rules are going to keep you out of trades. They're going to keep you out of trades that do exactly what you thought they were going to do, but you have to be okay with that. Rules met or rules not met. Bobby, I can find a million trades that don't work. My opinions cost me money, guys. Your opinions are probably going to cost you money. Here's a 50-50 trade with divergence. And I'll be damned, it ran you right over. If only Mark would give us a plan that says when divergence prints on a 50-50 trade, don't take it. Not yet. Not until you've done the study to learn how to take these best. Who's going to show me where they got run over at support inside of that trigger? Anybody? Who are my NASDAQ traders that fought those strong small triggers? Anybody? This is where the magic happens, guys. You got to post those pictures. So, follow the path, stick to the plan, simplify, simulate, post in class, fill your spreadsheet, go back and replay it, practice the correct rules. Why not, Zeba? What didn't work well? Was it because there was divergence on a 50-50? Was it because you fought the small triggers? Guys, a lot of times trades aren't going to work and you're not going to have any idea why, and that's why you have to do exactly what Zeba did. Zeba, everything's set up. We knew that there was a 99.67 fib right here. You don't have synthetics on your chart. But you took an entry directly into the area, and then you hoped that the area would break, even though divergence. So, Zeba, what you did is you relied on momentum. Am I reading that right? You said with all this momentum, the market's likely to go up. Cool. So, doesn't it make sense that a Fibonacci area can kill that momentum? Doesn't it make sense that a loss of momentum could be an exit condition? Therefore, well, you got out just a little bit late, right? So if I'm trading into this area, this divergence is true right here. At this point, I'm break even at best. Right on. But don't you see how at this point into a fib, at this point with the potential for divergence, there's no reason to lose on that trade, right? If you're managing momentum, momentum in, momentum out. All right, Rakesh, that is an amazing question. So let's do it in 2 parts. The first thing is let's go to the software user guide, the instructions, and let's see if we have an entry video. Dun, dun, dun. Maybe not. All right. So Rakesh, let's cover some questions. The first thing is we use limit orders, right? We use limit orders to buy or sell pullbacks. So when we're using limit orders, if I right click below price, Rakesh, my top option is buy limit. So if I click on that, what I'm saying is that if price comes down to this area, I'm going to be in a long position. Obviously, it's a downtrend. That's not my best bet. If I right click above price action, my first option is sell limit. This will get you into short trades. And here I am with the sell limit. If price pulls up to this area, then I'm looking to be in a short trade. So far, so good? Rakesh, if you're trading high probability trend trades, this limit order should really be it. Okay, then let's do this. What's your specific question? What are you having challenges with that I can fix for you? It's not the limit order. Is it the ATM strategy? Is it setting up stops and targets? Whoops, sorry. And guys, this is what this classroom is for. If you have a challenge, even if it's not reading the software, get it in the room. Let's get you answers. Let's say you have an order at 15,300 and you add more contracts and then they close out your previous position. All right, so if I'm short right here, right? And then what you want to do is add to your position, is what you're saying, right? I can hit sell market again and I can add contracts, or I can have a limit order waiting for a potential pullback, and if it reaches my order, it's added more contracts. Does that make sense? My stops are in place, my targets are in place, and obviously that wasn't a clear area and divergence printed, but does that kind of answer the question? If you want to add more to a sell, you have to sell more. If you hit buy, it'll close out the previous position. If you hit close, it'll close out the previous position. But the only way to add more contracts to a short position is to sell more contracts. And the only way to add more contracts to a long position is to buy more contracts. So you have to do that either with limit orders and let the market come back and pull you in, or you have to add to your position. There's a sell, and then there's more contracts and more contracts. And obviously, that's a horrible trade, but I can compound over and over if my rules are met. So if you hit close, it's going to exit your initial positions. If you hit buy, it's going to exit your initial positions. Or if your target for the initial position is hit, it's going to exit that initial position. Does that make sense? Awesome. Great question. I think that's a great question. Guys, I'm going to take 5 minutes and stretch my legs. I'm going to leave you in the room here. Post your pictures, ask your questions. If you're brand new, and this is going to sound silly, but if you're brand new, do me a favor. Take a picture of your chart and tell me what you see. That's all I want. Take a picture of your chart and tell me what you see, and let's talk about it. Even if it's one thing, even if it's a termination, or even if it's odds favorable, or maybe if it's just, hey, this is a divergence low. Tell me what you see. Let's focus on chart reading. I'll be back in about 5 minutes, and we'll get into that next hour, guys. Back in just a sec. All right, y'all, let's get into that second hour. So I'm going to start clicking on some of the pictures that you guys have posted, and we're going to talk about them. We're going to talk about rules. We're going to talk about what I see, what you saw, and hopefully everybody's going to get a little smarter on this one. So we're starting with Joel. He dropped this in the room last night, and I love this. Joel's coming from a termination condition. Everything says down. The smalls have broken through this area, but the large have not. Therefore, this is not a termination condition, Joel. This is a 50-50 trade. Smalls are through, large are not. You have one divergence on that 50-50. Some people won't take this trade, some people will. But your entry is absolutely beautiful. Your stop is in the right place. The second higher divergence on a 50-50 is typically a deal breaker, right? And Joel, you sent me a picture later that showed me that we did get three divergences in this same location that ultimately changed the trend and sent the market railing up. So I took a picture of your picture because I think it's great to re-annotate charts, right? To come back and re-annotate. And I put on there that a termination condition means that price reaches the area and no trigger lines break through. Reminding yourself, what is the recipe for a termination condition? Guys, write it on the chart every time you think you see one. If you write the words out, recognition becomes easy. This is a 50-50. So, Joel, you broke your rule on a divergence on a 50-50, right? Normally, you don't take those 50-50s with divergence, but you did have a good top. And this is a great expansion for you guys. If I have a great top or a great bottom, if I'm coming from a termination that creates a full reversal, my trading plan says one divergence with strong triggers doesn't scare me out. That's my personal plan. If you're following the plan for simplicity that I provide in the class, it just says no divergence, no trade until you get the repetitions in to understand. But that's up to you. That's a decision that you have to make. And then when the second divergence prints on this one, that's your cue. All right, let's get out of this trade. Two divergences on a 50-50. That's a great way to do it. So great management, Joel. I like the trade. You took it perfectly. The management was solid. That second divergence said don't hold and hope. I really think it's a great trade. Nice job. Ziba, you're not getting filled. Is price reaching your limit order? That would be the first question. So it goes through your orders and doesn't fill. That's just, there's nobody to take the other side of your trade. And that happens sometimes. Sometimes you'll get partial fills. But that's not so much a, I don't know. I'd take a video of you taking a trade. You may be doing something wrong. Are you waiting for a limit order or are you trying to hit buy or sell now? Because most of the trades I see of yours, the trade's already going in the direction, right? It is a limit. So for example, you used a limit order here. Okay. And then Bobby says he usually has to increase his limit price to get picked up a few ticks. So he'll kind of lead it a little bit. He put it out there. He's willing to lose a couple ticks extra in order to secure. So remember, Zeba, that when you enter the market at a specific spot, If you go short, there has to be someone on the other side of that trade. So if everybody gets filled and you want to go short, but there's nobody to take the other side, you're not going to get filled. It's just, it's an unfortunate reality of trading. How are you using limit orders here? You're at the bottom of the bar. There's no way there's a limit order there. Okay, you clicked sell. So, okay. I don't understand what the challenge is. Is it not selling you immediately and that's what you're concerned about? Because at this point, the market is railing light speed down with momentum, everything. Okay. So let me try and reverse a little bit. It's just you're not getting fills. It's a sad reality. I don't know why it's happening to you. I don't know how often it's happening to you. I have trades where I don't get filled, or I have trades where I only get half filled. It happens sometimes. Unfortunately, there's nothing that you can do to adjust it. Put your trade in the right spot and hope for the best. And I know that that's not the answer that you wanted, but that's a reality of it. Is I'm going to put my order right where I think it should be, and I'm going to hope for the best. All right, Gary, you have your NASDAQ, you have a 50-50 trade on the NASDAQ, and you're looking for that pullback. Great pre-trade setup. And then Gary, here's something that's interesting, and I'm not sure why this is the case. Look at your large chart here coming off of support. How is your large chart different here? You have two different fibs. Well, Zeba, NASDAQ's fast, right? And if everybody's already got their orders in and it's screaming, you're hoping somebody has something on the other side. Gary, did you notice that this morning? Not coming from a good bottom? Coming from a good bottom? Your NASDAQ charts aren't the same. Do you have two different NASDAQ workspaces up, one to trade on and one to read? So here's your pre-trade. There's your actual trade. Your entire chart's just adjusted. This is just technical. I don't know why it happened. I love the trade on this one. It's beautiful from a good bottom, odds favorable, smashing through the areas. Okay, so you got different fibs. It made a difference in the trade. I love it. Gary, this is a beautiful trade. Odds favorable. Everything says up, right? No divergence. Right back to support inside of favorable. I mean, giddy up. What a beautiful trade. But I did see the differences and I was like, wait a minute. And then I actually posted this picture, Gary, because mine looked like your first chart. And since I didn't have a strong termination condition creating a full reversal, the divergence keeps me out. And Joel, that's what we talked about. Guys, I'm okay with one or the other, but I can't have both. I can't have a bad bottom or a bad top and divergence. And then NASDAQ traders, look at where the large or where the small triggers are. You guys that are taking NASDAQ trades. Do you see how far away the small triggers are? They're a full bar away. And Gary, this is why I really loved your trade. This is a get in at the area because it's likely to come back and hit those triggers. Absolutely. But once these triggers start getting closer, NASDAQ traders, it gets ugly. Once those triggers start railing in and they're less than a bar away, that's when they're going to activate as support or resistance. Does that make sense? NASDAQians? Trying to come up with a clever name for you guys. I'll share that picture with you. I took this one too. Like Houstonians, very much. So Gary, I love your trade from that good bottom. That was probably one of the prettiest 50-50s you could take. Absolutely amazing. And then Safia, not a good bottom. Divergence prints, you take it. Profits, second divergence prints. So Safia, two divergences on the NASDAQ, weak triggers. I'm not sure that I would take that entry. I love your first one. Just above the area, beautiful management, out of that trade. Nice job, Safia. And then this is one I think that I just posted, right? It's a 50-50 trade. There's a divergence on it. And look at the strong triggers. That's enough to keep me out of that trade. And I think some of you took it. $50-50 with divergence. Looks like you got in low. So not a good top. 50-50 with divergence. And you get in directly into those small triggers behaving as support. And ultimately it runs you over. You only took one? Awesome. Guys, do you see how, and this is a good one, especially for NASDAQ. A 50-50 is a medium probability trade, right? And a 50-50 says that the area isn't broken. And here you have a couple areas that aren't broken, right? I see 1 fib, 2 fibs, and 1-to-1s. Everything says down, absolutely, but this divergence prints on a 50-50, not from a great top. These small triggers are strong on a 50-50, not from a great top. So you're kind of stacking disadvantages there. Does that make sense, Safia? These are the ones, and this is something that that really helps me too. And let me take a picture of, actually, you know what, I already have a picture of the picture. Let me show you my thoughts on this. This is my area, right? That's where I'm hoping this trade comes from, is somewhere right around here, if it's going to happen. Look at how far away the first close below the bar is. It's 7 points away. That's huge. I was waiting for a close below somewhere closer, right? Let it push up. If I get a close below over here, close to an area on the other side, on the business end of the side that I'm trading, I love it. But your window of opportunity on this trade, was that big. That's a huge window for a 50-50 with divergence. What do you mean even if it doesn't give a pullback? If I'm taking this trade, I'm taking it with a close on the correct side of the small. I'm not taking a close and then a pullback. Yeah, okay, cool. I answered. Awesome. So I think setting up, it looked really nice. It really did. I was watching it live with you. But those are the conditions that got me. I'm not willing to take a trade where my trouble spot is 4 points away on a 50-50, right? That's $80. I'm not putting $300 of risk on $80 to the first trouble spot. That's that medium probability trade mentality. That's where you have to say this isn't a clear path. This isn't everything says go. This is a, man, I sure hope that area breaks trade. Oh, that's the same one. Sorry. And then Gary, termination. End of story. I love it. Gary, if I would have taken these pictures as a new user, it would have saved me thousands of dollars. Guys, if termination conditions are your problem, take pictures of termination conditions. That was my problem. I traded into termination conditions like someone was writing me a check for it. And Gary, everything looks like a channel when you compress your charts like that. This is odds favorable. This is clear path. This is just waiting for things to come together. Guys, you can make your charts look like anything you want. Watch this. Whoop. NASDAQ's in a channel. You see how that works? Let your charts breathe a little bit, guys. It'll help. Because on that same token, Gary, if your large chart isn't stuck in between fibs, you're not in a channel. There's no channel. What you're doing is you're watching your small chart work it out while your large chart figures out what's going to happen with this area. And see how your large triggers keep coming, small keep coming. So you're looking for agreement to come through. When you start creating labels for what's happening on a small chart, it's going to keep you out of opportunities on the large chart. Oh, it's a bearish day. It's a bullish day. Just go with, man, my large chart says everything's down and it's strong. I'm going to wait and see if I get some agreement on my small chart to look for an opportunity. Bobby, I love the way that you focused in on that. That's determination, right? That's beautiful. One tick away, creates a full reversal, gives the 50-50, perfect entry, quick profits, out up here. Bobby, rock star. Nice to see you posted in class again. Then Gary, 50-50. Potential pullback to mid-band. Why are you so... And Gary, this is a serious question. It activates your carpal tunnel. I'll tell you what, I've already had the surgery and I've got it bad. Watch this, Gary. Click the F and you'll never have to resize it. And that was about the worst excuse ever for smashing your charts. Carpal tunnel is when the sheath in your wrist affects the nerves going into your hand and it becomes very painful to grasp anything at all. It does hurt like hell. I've already had one surgery on it. But Gary, click that. I've got carpal tunnel as bad as anyone. I've already had it fixed once and it sucks again. But to say that you can't click this F because of the carpal tunnel, that's a little silly. I'm just saying, throwing that out there. Check it out, guys. 50-50, not from a good bottom. Divergence prints, split triggers, son of a gun. Another attempt at that didn't have to happen. And then Gary, I was going to ask the question, and this is just a curiosity. This has absolutely nothing to do with your rules, with your trades. Why are you so focused on a mid-band? Areas inside of favorable large triggers, right? Areas. But Ziba, it was a 50-50 from a bad bottom with divergence. How many more reasons to not take a trade do you need? Does that make sense? And I'm going to ask you guys, do you have a plan written out? What are your rules for a 50-50? The strong triggers look great, but the rules weren't met. Gary, remember that this resistance may be an entry point, right? It's the areas inside. It's the fibs, midbands, and yellow one-to-ones, and you type midband a lot. Um, I'm going to put my money on a fib over a midband more often than not. Midband's just a moving average. Fibs are a reflection of the psychology in the market. It's a reflection of that fear and greed. Don't discount the fibs or the one-to-ones in there. All right, Safia, termination. Everything rolls. You take the close above and you get paid. I like it. So let's do this one in two parts, right? I'm not sure why you took this entry. No, you can't put too much information. Safia, I can't think of any reason that this is your entry here. It doesn't make sense. You still have strong triggers against you. Everything says down. But then when you get this great termination condition, when you get a full bar, when you get no divergence and it pulls back here, I love that you're looking for this one. You take it on the correct side of the smalls and you get out as we get into that key area. You let fluctuations get you a little bit, but then you get a 50-50 trade, right? And you get a 50-50 trade with divergence, and you get a 50-50 trade with the gap theory in place. Large triggers all the way below full bar and below all the areas. No reason to take this long. And it looks like you corrected pretty quick. Nice job. You got scared that it was going without you and you jumped in and then you said, whoa, wait a minute, that's not the right trade. Nice recovery on that one, Safia. This one's aggressive though. That's your easy one. That's your no sweaty palms trade right there. Nice trading. And Jose, we looked at your Zeba jumping in. Jumping in and ignoring divergence. That's the only challenge, Zeba, that I have with what you're doing here. Especially because I'd love to see your exit conditions. I know why you're getting in. You're getting in because, well, you decided to ignore the second divergence as well. Right? Momentum style entry, you lost momentum, but you decided to ignore it, right? I'm sure that your plan says make a decision to ignore it in the moment. And then the second divergence prints, and you're like, you know what? I'll get out at resistance inside of favorable large triggers. Ziba, I'm sure you have a plan, but this is a great reminder for you other people that don't have a plan like Ziva does, that an opportunity, if you get in because of momentum, you should get out because the momentum goes away, right? Doesn't that just, it makes sense. But second divergence was true right here. And you are out almost 6 points beyond it. So we have to work on your reaction time, maybe? How do you make the decision to ignore divergence? It was intentional. Okay. Your plan is your plan, but Ziba, I'm just going to throw this out there because class is about helping. That's all you wrote for me, right? Do you want feedback? Because if this is your plan, tell me it's your plan. Because to me, a momentum style trade that ignores two divergences, there's a fundamental problem with the plan there. Why didn't it work out the way you expected? What changed? What happened? What made you exit out here when this was still strong? What made you get out here even though, So give me some information. Help me out. Because Ziba, I can't figure out your management at all, and you won't give me management rules. Tell me why you entered. Tell me that you had odds favorable momentum, the clear path, right? Tell me, why was this your entry, and why wasn't it up here where the area cleared? Because if you get in at 80, when everything clears, you've got $200 worth of profit until that first divergence prints. Does that make sense? Like getting in all the way down here says, damn it, I didn't get through here. I'm trying to figure it out a little bit, and I want to help you with every trade that you take. And I want to give you feedback on everything, but I need a little more information about your plan. I would love it if you just want to send me a copy of your plan. Um, I will be more than happy to go over it so that I can become familiar with it, and then I can give you the best feedback possible based on what it is that you're doing. Gary, how is this not a good bottom? Hold on, that's a 21.3 and a 21 range? And guys, I've put that invitation out to each and every one of you 1,000 times. Send me your plans. Well, it's not a bad chart if you're actually using it and annotating it. That's I don't want Mark to see that I'm changing up my charts all the time, and that's okay. You do you. The more you give yourself to look at, the less you're going to find. Oh, look, there's the same charts. It couldn't have been a bad chart, right? That pivot stop out at resistance. Smalls barely make it. There's another. Guys, I know I seem like an asshole sometimes, but if you're giving me charts, but you're not giving me information, or you keep changing what you're doing, I'm going to point it out because it's rarely advantageous. Safia, are you with me? Safia, can't we suggest that a termination that creates a full reversal is a good top? Right? Price comes up, reaches Fibonacci resistance, no triggers break through, we go from green to red, then you get odds favorable and no terminations from a good top. You get in a little bit early, but it works out great. One divergence pushes you back to your entry. Two divergences, and you're like, you know what? Two divergences on the NASDAQ can push that market up a little closer. Safia, I love everything about this trade. I think this is a beautiful, beautiful display of NASDAQ trading. Understanding that a pivot stop out below you is probably going to push you up higher. This is a nice trade. Very well done. You had the advantage of momentum, and then you managed your small chart based on the looks. Areas inside a favorable large triggers, Safia. Write it on every chart. Areas inside of favorable large triggers. And then we saw this one already. This is a double post. Oh no, you went long. Why would you go long there? Everything says down, not a termination condition. Everything says down, only one divergence. Don't be sorry. You said 50-50 entry inside of large trigs. That's a 50-50 short, isn't it, Safia? I want to show you what I see. I see that the trend is down. Let's do this, because this is where the trade happened. Right there. So I'm going to draw arrows. I see that the trend is down. I see that the momentum is down, right? Small triggers way below the large triggers. Large triggers are wide and angled in the direction of the trend. Whew. That's a lot of down. Let's see if the small chart rolled. Smalls are down. Large are down. Synthetic are down. I'm below all of the areas. The only thing that even suggests up at all is the tiniest, smallest momentum indicator on the small chart. You wrote two divergences, but you didn't. You only had one. It's not a termination because price didn't reach an area. Does that make sense? Am I going through all these things? Safia, you are living a charmed life, my dear. You got so lucky. You fought everything available, everything set down. I would have rather seen a short trade going with everything, going with direction. And guys, this is one of the challenges. If somebody walks into this room and says, hey, check out this trade that you can take off of a great termination, and you don't give it 6 to 8 weeks, 100 pictures, 1,000 pictures of testing it, you're going to take this trade, you're going to get lucky, and 99 out of 100 times, this trade's going to kick your ass. What do I mean about what? Odds favorable momentum, right? 50-50 trade. Strong triggers, only one divergence, area of resistance inside of favorable large triggers. Does that sound like a familiar recipe? I'm all right, Sophia. I'm gonna say, let me get everything off of here, okay? I'm gonna go through. No, that's okay. Whoops, wrong one. I'm gonna annotate a chart. That's okay. You are talking to me. I'm in a downtrend, right? That's the first thing that I look for. I have strong triggers down. Do you see it? I have a 50-50 trade to the downside because small smashed through the one-to-ones and the large are chasing with odds favorable momentum. So far so good, Safia. This is my large chart read. Okay. This divergence didn't print until about right here. So there's no divergence even. Everything says down. Now let me go over here. I have a pullback to resistance inside of favorable large triggers to the downside. And just for good measure, I have strong triggers supporting more down at the time of the pullback. Doesn't this area of resistance right here inside of favorable large triggers fit the rules to go short? Does that make sense, Safia? But does it make sense? So what happens is your brain is telling you right now, I have to find that John Novak momentum short. I have to get into that long trade and be the first person in the market because it's freaking exciting when he comes in and teaches a class. But let's talk about what has to happen for that momentum trade to actually be a trade. This has to be a termination condition, and it's not. It's just a pivot. A full bar to the upside has to print, but it hasn't. And your small triggers still haven't even gotten above the large. So what? It's a misunderstanding of a lesson, which is totally cool. And I'm glad that you posted this because hopefully we can get a little clarity. But one of the biggest problems that people make is forming an opinion, right? Is trying to take a trade that they're not prepared to trade. Zeba, you don't have a plan for it, but you're trading the NASDAQ. Then, so if you're not comfortable with something to the point to where you can't even write out a set of rules for it, why on earth would you risk your money on it? Why? Why would you risk your money on it? You do whatever you want. Pictures don't cost anything. Dedicated's great. You know what? The guy that got run over by a tank in China was dedicated to his cause too. So PFI, the best way to backtest is to scroll back. You're welcome, Safia. It was a great lesson there. Thank you for posting the picture. When you have Zeba, the second you're capable of writing a plan, your life is going to get easier. Your happiness will come. PFI, are you with me? Scroll back, any market. When you see odds favorable momentum and you see these tails, circle it. Scroll back on your small chart so that you can see the two circles and take a picture. Do you see how I just did that? No, it goes back 10. It goes back so much I can't even do it. It goes back 10. So you can scroll back and you can do this over, and look, there's circles from the other day. And you can do this over and over and over and over, right? And then you can take these pictures and just circling them. I think that in 10 days, PFI, if you find 20 examples in 10 days of high probability trend trades, let's go through the math. You find 10 days and you find 20 examples, right? And let's say that of those 20, 15 wins. And of those 15, 10 of them are $100 and break even, right? So I've got $1,000 there. And then I've got another $750 on top of it, right? So that's $1,750. And that's going to be minus, I don't know, maybe $600 in losers on a 2 lot. Let's say you scroll back for 10 days and there's only 20, and there's probably more than that. And you make, what is that? 575 in the week. That's a pretty weak. That's not the strongest week, right? That's only $575. It's an extra 24 grand a year, which isn't bad. That'll pay your Corvette note. But what you're doing is you're developing the ability to pick these out, right? To pick these winners, to recognize the look, to go through, and you're creating this database, PFI, in your brain that says, in order for me to be successful, this is my best look. And you're going to type your rules on there. Odds favorable, smalls broke through, price hasn't reached the area, right? There's a pullback directly to resistance inside of favorable large triggers. This is how I'm going to get paid. And that's with super pragmatic management, right? So if I'm in at 76, By the time I get to 66, I'm already out for 300 bucks. But as I grow with the software PFI, I'm going to recognize that these strong triggers mean that it's likely to at least breach the area. So now I'm getting an extra $100 to $200 out of each trade, right? So now a $300 trade because of the momentum becomes a $500 trade, and a $500 trade becomes a $700 trade because you're getting so good at gauging momentum that you begin to recognize where the market is likely to go. Does that make sense? Why? How about you start small, PFI? How about if you say, I want to take the right trades that give me a statistical advantage? And here's the cool thing, is if you get in a $1,000 trade with all the rules met, and you do it on a 100 lot, well, you just took your $100,000 trade, but it's not a $100,000 trade. It's a $100 trade. All you did was up the contracts. There was a gentleman that traded Nexgen for a while, and he would trade a 100 lot, and he would literally take a point in the S&P. He would trade a 100 lot, and he would take a point. He would make $1,000 a day in about 8 seconds when everything was perfect. And he was making $20,000 a month. You can, if you try to take everything. Look at Ron C's charts. But PFI, this is why I stress chart reading so much. With this much momentum and this clear path and this momentum, is there any reason that you can't go from 42 to 37? That's a $100 trade right there, isn't it? Doesn't that follow momentum? Doesn't that follow a clear path? Doesn't your small chart say that there's momentum too? Do you see how it's nothing but chart reading? And if I pluck $100 out of the market on a 5 lot 4 times a day, I don't ever work again. But it's chart reading, right? Zeba takes this trade. Ron C takes this trade. Tony the Tiger takes this trade. But if you never learn to read your indicators, if you never learn to identify momentum, if you never learn to identify a clear path, then you're at a disadvantage. And this is why I stress to people, make it easy first, right? Anyone can make money with a high probability trend trade if they sit on their hands and wait. So go back and study it, PFI. And if you look at 1,000 pictures of a high probability trend trade, don't you think you're going to begin to recognize patterns? Don't you think you're going to get to a point to where you may say, when everything is down and strong and I break through an area and I have a clear path and the small triggers don't follow and I have a midband and resistance, maybe I can take this opportunity in a strong trending market to get to the next area? And then you start incorporating medium probability trades. But if you start forfeiting an advantage before you fully understand the advantages, it creates a disadvantage. Yeah, so right click and go to your data series. And right here where it says days to load, change it to 30. It's going to take a while for that chart to load, but you can go back 30 days. Absolutely. Does that make sense? And does that make sense for everybody? Keep it simple. Focus on simplicity. Learn to read your charts. And then from that, oh my gosh, embrace the kickassery. Because there's a lot of money to be made. You just have to be patient and wait for yours. Termination condition directly into a termination condition, and that termination condition holds, right? No reason to trade into areas likely to hold. Financial suicide. And now you're waiting for the clear path. Didn't wait for it here. but you're waiting for it here. I like it. All right, E. Green trend. I like it. Coming off a termination condition, but the smalls are still above the large. So what you're waiting for is that large chart to kind of give you the okay for shorts, right, E? You're saying, all right, I can see it. I can see the termination. I can see the triggers rolling, but I'm going to let these smalls get below. I'm going to trade with the trend, and your small chart's already setting it up. I love it. This is a great picture. This is a great picture. But this is why you post the picture, right? And this is how I see it. So let's annotate it right here. Woo, that arrow's too big. So now we're recognizing termination conditions, right? And that's it. So this is a great way to annotate. There's my termination condition. You had the green trend. This is starting to say down and you recognized it. And this is where I love for new users. If small get below large, I'll look for a trend trade short. And that's it. That's all you have to say. If this termination creates a reversal in the market and the smalls get below the large, I'm going to look for a trend trade short. And it's already trying to set up over there. I don't think you understand just how well you read this chart because that's brilliant. You've identified the conditions, you've identified the trends, and now you're just waiting for that momentum. And once you identify the momentum, like you said down here, then we'll start looking for entries on the small chart. Great job, E. Guys, this is what we do in class over and over. You show me a picture, we'll talk about it. You show me a picture, we'll talk about it. And together, we're going to get exactly where you want to be. Paul says, everything says up, pull back to support, make money. Make money again, everything still says up, pull back to support, make money, make money. Paul, could you make that look any easier? Every chart agrees, the direction agrees, the momentum agrees, and you take the trade. Don't trade signals that aren't at the area. Oh, so smart. And then the triggers weaken, and you get divergence, and it doesn't work. Paul, I don't know if you did this on purpose. This is the greatest lesson ever. I want you guys to see something. From here to there. That's the best, isn't it? Isn't that the best of the best? From there to there. Because once we get here and anything can happen, and that anything can happen is confirmed with a loss of momentum, and that loss of momentum is confirmed with the small triggers inside of the large, and the area is not outside, then it becomes problematic. You forfeited the advantages. New users, I want you to tell me that you understand that little lesson. This is where the money is made, especially for new users. That's when it's easy. That's when it's effortless. That's when great things happen. His last entry is right at the end where it comes in, and then he takes his exit. That's it. That's where it was easy. Beautiful trading, Paul. Beautiful, beautiful trading. My favorite question, is this a better entry? Weak bottom. What does 50-50 mean? Help me out with that concept, Safia. When you say 50-50, what do you mean? Because when I say 50-50, I mean that the smalls are through the area and the large are not with odds favorable momentum. Here, smalls are inside of the large are down, but the small are up, and I'm not coming from a termination condition. So once again, rule number one of a momentum style trade has been broken. You do have small trigger momentum, and you let the large roll. That's a much better entry because you let the small chart begin to show change. Does that make sense, Safia? And then there's a huge gap. That's a great first shot. That's letting the small chart change. Notice that this was a 50-50 that failed as well. Nice job, Safia. All right, GWC, I know you've been patient. Thank you. Everything says up. You take a pullback to support inside of favorable large triggers and you get paid right up to the fib. There's your entry right there. Beautiful. Green background on all charts. All charts agree. Strong triggers, room to the target, entry inside of favorable large triggers. GWC, perfect. He's a man of few words. But when he comes in, it's nice. Bad top, 50-50. Paul says he needs a signal to enter that trade. There's one divergence. Nice pre-trade picture. And then 50-50 with divergence. Didn't get you. Don't chase. I like it. PFI. What is this? How do we deal with this? I love it. It's a line on a chart, PFI. Let me give you the real answer, though. Dun, dun, dun. Let me find it real quick. All right, PFI, are you with me? Cool. So on your large chart, and this isn't just for PFI, of course, this is a lesson for everybody. On your large chart, there are synthetic fibs. So you're going to have your native fibs. PFI, if you're looking at the 13.2, the fibs that extend all the way into oblivion, those are native to the 13.2. Those are created from the swings that happen on the 13.2. But we use multiple time frames, right? We use large charts, small charts. So these skinny little fibs that stop printing, they're still in play. And they'll print like one tick at a time, but they won't extend all the way to the right. These are from your 5-1 chart. And then these big fat fibs, these are from your 21-3. So when I'm looking at, and let me get off of NASDAQ. We'll go to the S&P. So if I open up my S&P, you'll see that when I'm all the way over, I still see my fibs. I respect these fibs. It's still trigger lines. It's everything happening now on CL. Cool. Price reaches resistance, no trigger lines break through, right? Not looking for a long trade. It's that simple. Anything can happen, triggers. Multiple divergences, no areas inside of favorable large triggers. It's not a high probability trend trade, right, PFI? I don't have the advantage of momentum. I don't have an area inside. What this is hoping that this red fib holds. And as you grow with the software, you can use a higher time frame. What did my higher time frame say? It said odds favorable momentum, right? But it also said, Jose, Termination condition, textbook. So PFI, if you went up a level, that momentum, it says that this area is not expected to hold yet. Everything's potential, right? Everything's a potential this or potential that, but do you have rules to support it? Do you have rules that provide a statistical advantage to take a trade? And if you don't, what does the following lower blue fib mean? This? You do have a clear path down, right? But PFI, do you have momentum? This is a target. If your rules are met for a short trade, I see what you're saying now. I'm going to show you. If your rules were met for a short trade, that blue line off in the distance, I respect every line. This is a target because nothing's reached it yet. It's off in the distance. If I find myself in a short position, these fibs in the distance can be a target. But if price reaches the area and no triggers break, then it's a termination. Does that make sense? I think that answered. I respect every line, but until price reaches it, it's just another target. So this blue line here doesn't mean jack to me until price reaches it. What means the most to me is that I don't have momentum. What means the most to me is I don't have areas inside of favorable large triggers. And for me, I don't have a trade. And now my smalls are getting above. Yeah, great question, man. That's an awesome question. And that's how you get better, guys. Don't be afraid to ask. Paul, two divergences, previous entry at area. So it's barely a 50-50, multiple divergences. You're going to look for the short over there. That's the S&P. I do hope that works out for you. I am always rooting for you guys. Ron C., there's a question in here. Let me take a look. What's up with the fib changing? That is probably one fib on top of the other. Yeah, never jump the gun. So PFI, everything that I teach revolves around advantages, right? Every pattern that I teach revolves around having a statistical advantage every time you take a trade. Statistical advantages are provided through the back testing that you're going to do, right? Ron, I'm not 100% sure. What it may be, that might be a John question, to be honest with you. It might be a 21 fib that's printing over, so it's letting you know that you have both of them right there, multiple areas stacking one on top of the other. But since it's smaller and squeezed, it doesn't look like those big bumps. They come across looking like smaller bumps. On the NASDAQ, let me see if I have them. I don't think that's a software problem. Yeah, I've got them. They just don't look the same. Maybe different monitor resolutions. I've got them though. Same as you. You're good. Sometimes just a little reassurance goes a long way. Gary, 50-50 from a good bottom, no divergence. Pull back to the midband inside a favorable large trigger. Since you didn't get a signal, you didn't take the trade. Good job following your rules. Midband acting as resistance. Large triggers a full bar away. Gap theory. Nice job, Gary. Paul, E-mini definitely has more follow through on 50-50 than crude oil, it seems. Yep, and there's your pivot stop out for the entry with all the momentum. Nice trade, Paul. Good job keeping your head in the game, right? Knowing where your best entry should come from. And then GWC, same trade. Guys, there was a time in class where we lovingly referred to this look as the Pineski, um, because that was Paul's username. All it says now is P. But one of the things that you're going to begin to realize is the more that you watch these patterns and look at GWC's chart, odds favorable, nothing in the way, clear path, not worried about this fib because it's on a smaller, faster chart. He doesn't concern himself with it. The first entry doesn't get you. Divergence pushes back, but it doesn't get you. And it pushes back down right to the same area. And then there is a second divergence. Guys, who remembers how many divergences does it take to be a termination condition on the small chart? Is it 7? 3? Absolutely. So if I have 2 divergences and strong triggers and a clear path and nothing in the way, guys, this midband inside of favorable large triggers is a high probability trend trade entry. Beautiful. On Paul's chart, it was a 50-50. So what Paul did is Paul said that if I have 2 divergences here, it's likely, based on my study of patterns, to take out that previous pivot. And this previous pivot lines up with resistance inside of favorable large triggers. That's how GWC picked his entry. And if you look at Paul's chart, that's exactly how Paul picked his entry as well. The more you spend time with the software, guys, the more you begin to recognize these patterns and the more you're going to get out of your trades because you're going to be able to reduce risk even further. And then Paul, holy smokes, and you pulled her on to get the rest of the move. Nice job. Killing it, guys. Great trading. And we just made it to the end of the pictures. If I missed your picture for some reason, let me know. My man, Paul. I love it. Let me know. I never miss a trade intentionally. And then PFI. No momentum, right? It pulls all the way back to the midband. Notice how nothing flinches. Everything continues to stay down. Potential for the short. We can't do it against all of this. For those of you that love looking for a continuation style, that's how you're able to catch this move down to the next area. When everything rolls, when all the triggers agree, the smalls are down strong, everything works out. And now we're at a potential termination. We have one divergence, and it just pulled back to resistance inside of favorable large triggers. All right, so I'm going to take a few minutes. Once again, you took it on the NASDAQ. Which one, Ziba? Which trade did you take? All right, nice job. Before I leave, I'm going to say one thing real quick, guys. If you don't have a plan written, you don't have a plan. And if you don't have a plan, you are leaving everything you do to emotion and opinion. PFI, what's the recipe for a termination condition? Do you remember? 2 things have to happen. So it has, no, let's do this. Here's the first thing. Ready? Price reaches an area. So in order to look for a termination condition, the first thing that has to happen is price reaches an area. What are those areas? The areas can be Fibonacci support, Fibonacci resistance, yellow 1-to-1s, and check it out, divergence lows. So when price reached this area, triggers didn't break yet, right? No, you're good. And look at it creates a little bounce. So in order for this divergence low to be broken, and let's do it this way. Price reaches, no triggers, no trade. Does that make sense, PFI? We reach the divergence low, no triggers, and then let's go to the next bar. Still no triggers through, not looking for a trade. Now the smalls are through, but the large aren't, and that's when this happened. As that area has the potential to break because the smalls are through. Now the smalls are through and they're accelerating outside of the large. And now they're both through. Now I have a clear path. Now the smalls are below the large. And maybe they'll give me a pullback to the midband right there at those large triggers, right? So it's like it's a hold on. And I like this example better. Because look at the momentum. Hold on. It might not be a trade. Small triggers break through. I'll look for the perfect entry. Small and large breakthrough. Go, cat, go. Does that make sense? That's the evolution of a termination condition. And then the flip side of that evolution is we'll find one to off to the side. Price reaches. No triggers through, no longs. Price still goes, no triggers through. Resistance holds. They gotta have all those dirty fibs in the way, right, PFI? Otherwise, I'm going long into resistance that may stop the market. Otherwise, I'm going short into support that may stop the market. I can't recognize, right? And I'm not going long. And PFI, what you just explained is the biggest challenge for new users. No, you don't buy the divergence on the retracement unless it's an area of resistance inside of the fib. And PFI, not every penny in this market belongs to you. Do you have odds favorable momentum? Okay. Do you have a clear path? Okay. Do you have an area of resistance inside of favorable large triggers? No. So if we retrace, is it going to go from here? Or do you think it has a better chance of going from here? Or do you just have no freaking idea? Because I'm losing momentum here, right? My triggers are inside here. There's not huge separation here. And PFI, what we did is we just made the perfect point. Is you're not sure at this point, right? It's not this look on momentum, but it's a good look. It is a clear path, but I've got two options for the short, right? Maybe it pulls back to 74 with everything below and then continues, or maybe it goes from the midband. Are you willing to take it from the midband and keep your stop above resistance? That's 13, that's about 17 ticks, about $170 worth of risk on a trade. The midband might hold, right? So maybe you say, I'll take it at the midband, but if I do, I'm not risking 17 ticks. I'm going to let them get me for 5 or 6 ticks maybe, and if it pushes up further. But I've got two losses of momentum. I've got weak triggers. Now I've got my small rolling. Now my small are coming up. Still not the best look. And look what's happening, right? Losses of momentum, weak triggers, no areas inside. Shit, I don't know what's going to stop this market. But if I took this short hoping that this little pink line held it, now my risk is all the way up here because I need something to stop that damn market if it's going to stop. That's a lot of risk for a trade that doesn't have a statistical advantage. Does that make sense, PFI? And that's why we teach these basics first, right? That's why we teach the idea that in the beginning, let's have all those advantages in place. Let's have everything in line so that we can have this awesome feeling every time we take a trade where we can kind of abandon hope. We can kind of abandon fear and we can take it. And what I said, I'd give that one maybe 5 or 6 ticks, and it went 6 ticks and then reversed. But I didn't know where this turning point was because I don't have anything inside of favorable large triggers for a potential bounce. Does it, Rakesh? All we learned here is that the rules weren't met. So I like it. I'll teach on live charts, guys, but if you don't know what you're looking for, then it becomes difficult. And then for my new users, do you see how price didn't reach this area? Divergence created this area. So now in order for 15,150 to be a termination, then it has to come back. You're waiting for a third divergence, PFI? What if it never happens? What's a bullish? Hell, I don't know. There we go. 1, 2, 3 divergences in the same area. Look what the market's doing. Isn't that incredible? That all you have to do is study these patterns a little bit to become good at them. And you have to be okay with the fact that it's not all yours. That's the hardest thing. It's not all yours. It can't be. So let's do it this way. What if price reaches resistance? Price reaches an area. Where are my trigger lines? What does that even mean? Super bullish green. I see large triggers down. Everything is below an area of resistance. Everything is below an area of resistance. Sure as hell not going long. In PFI, do you need to know what happened back here 30 minutes ago, an hour ago, to recognize? And I'm telling you, no, there is no but, PFI. What you're doing is you're saying because the market is going up on a day chart, on a month chart, on a year chart, what you're saying is that you're going to ignore, you're waiting for a clear path long? Okay, cool. That's where I think we're going. I don't have a trade to get in, but if I were a betting man, I would say that we go to 82.23 whoops, long before we go to 84.18 because I have a bad bottom. It doesn't come from Fibonacci because I don't have any divergence because I've reached an area of resistance with absolutely no trigger lines through it. And that suggests that this area may stop the market. Rakesh, you can do anything you want as long as your rules are met. Why would you do it though? Because the trend is up. The small triggers are up. The small triggers are up. Why would you sell against that? But PFI, you are absolutely right. It's too soon. It's too soon for a long. And what happens if the mid-band does hold because we're from a bad bottom? Rakesh, if you trade the overall, you're going to make opinion-based trades. If you trade what's happening in the moment, what you're going to find is it's going to eliminate a huge amount of your losers. Paul, great trading today. And then what do we know about a mid-band and resistance if those large triggers are all the way down here at that reversal bar marker? So Rakesh, the immediate momentum is up. The immediate trend is down. But we're into resistance that may stop the market. We'll see what happens. Is it going to close the gap back to these large triggers? Is it going to finish the move down to support? I don't know yet. The only thing that I'm 100% positive of is that I don't have any rules base to take a trade right now. Does that make sense, everybody? It may go up, it may go down, but what I do know without question is that none of my rules are met. If I go to my plan, none of my rules are met. If I look at the rules for a high probability trend trade, none of them are met. If I go to my rules for an HVA trade, none of them are met. None of them are met for a momentum trade. And I don't even have rules met for an edge trade because I don't have odds favorable momentum on a 21-3 if you start to incorporate more, which means that this loss of momentum may push me back up to one of these areas of resistance. But I don't know. Is it going to be this one? Is it going to be this one? The same way on the small chart, we didn't know if it would be the mid band. Maybe it's going to be resistance here. Maybe it's going to be a mid band here. My money is worth some confirmation. My money is worth just a little bit of understanding. So when you use words like bullish and bearish, when you use words like overall trend is down, Rakesh, short didn't work out, did it? It's great to have an idea and understanding what the market is doing, but I reached a mid-band and I have resistance and no triggers are through and my large triggers are darn near a full bar away. I just don't have a trade, guys. John Novak used to make this analogy and I thought it was the worst analogy ever. And he used to say, if you walk into a bank and you say, give me all the money, you're going to get tased and hogtied and hauled off to jail, right? You're robbing a bank. You're taking stuff that isn't yours. But if you walk into the same bank and you say, hey, may I have my money, please? You're going to walk out with cash. And trading is very much the same thing, guys. When you feel entitled to every move, when you feel entitled to every penny that's going on in this market, what you're going to find is very often it's not your money. And you're going to find that you just got hogtied and tased. But if you wait for that statistical advantage, if you say this is a setup that wins more than it loses, this is a setup that I've gone back and studied, that I've practiced, that I've recognized, it's in my spreadsheet. This is a setup that if I take this trade 20 times, I'm probably going to win 15 of them. Guys, that's your money. Your money is the execution of the high probability trend trade. Your money is having the advantage of momentum, having the advantage of a clear path. Your money is an entry inside of favorable large triggers. And then eventually you're going to diversify, right? You're going to look for that momentum trade, or you're going to look for that HVA trade, or you're going to look for that edge trade, Rakesh. But so far, that fib and those one-to-ones just aren't working. And aren't you thankful, Rakesh, that you didn't fight that immediate momentum, that you didn't break your rules and trade your opinion? Or maybe you did, and you're having a moment right now. Does that make sense, everybody? I feel like I'm behind the pulpit. There is nobody in this room that cannot do what we do. There is nobody in this room that is not capable of being successful in the markets. But there are 41 people in this room that are capable of breaking the rules. There's 41 people in this room that are capable of forming opinions. I'm one of those people. 42 people in this room. Guys, I'm very capable of breaking my rules. I prove it almost every day. But I'm on this path Is 0505 a good trade? What does that mean? 50-50? So we've got a 50-50 look, right, PFI? And with that 50-50 look, if I'm not coming from a good bottom, then I'm hoping there's not divergence, right? Because I have momentum, and I have an area with the potential to break, and I have strong triggers, and right now I don't appear to have any divergence potential, and I have what can be considered a tiny window of opportunity. PFI, there are no good trades and bad trades. You're asking me if it's a rules-based trade, right? It depends on whether or not your rules say it is. In the beginning, my rules say it should come from a good top or bottom. But I was telling Joel this earlier. When everything else is perfect and there's no divergence, I'll still take the trade. Or if it does come from a good bottom and there's one divergence, I'll still take the trade. So Rakesh, here's your live market. Strong triggers. Here's your trick question, guys. Do I have a clear path? Are both my small and my large triggers above support? Hell yeah, they are. And then PFI, is this a target or is this a termination condition? That's a target. What's my window of opportunity? There's my reversal bar. From the top of the triggers to the bottom of the triggers, but then I refine it. My highest point of support to my lowest point of support inside of favorable large triggers. Guys, are the rules met? Joel, it's not 50-50. I don't care about divergence. Are the rules met? Yes. PFI, I am contractually obligated by my plan to take this trade. Does that make sense? Am I guaranteed a win? But if I take this setup 10 times, PFI, how many do you suppose I'll lose? E, how many do you suppose I'll lose? Craig, how many do you suppose I'll lose? If something wins 70 to 80% of the time, I'm going to lose 2 or 3 out of that 10. The challenge, guys, is I don't have any freaking idea which trades it's going to be. So I have to recognize the conditions. I have to study the looks. I have to study my entries. And I have to commit to taking every trade that fits my rules. Not just the trades that I feel, oh, this feels good in my gut. My bird chirped 3 times on the pullback. So I'll take this trade. If it only chirps twice, I'm pretty sure the bird knows something. I won't take it. Guys, that's the shit that gets you run over. That's the stuff that has you breaking your rules. The second you let your gut take over and you abandon the rules that provide a statistical advantage, that's where traders make mistakes, guys. Opinions. I would rather be in the right trade that loses than the wrong trade that wins. Price reach resistance. Absolutely no trigger lines broke through. Which rule's not met anymore? I still have odds favorable momentum. Do I have a clear path? I don't, do I? It's a termination condition. Is it okay to sit on my hands and wait? Or should I try to take a trade anyway? Should I say I know price reach resistance, and I know that there's multiple divergences, and I know that I don't have a clear path, but damn it all to heck, I just wish I was in a trade. No, that's ridiculous. Awesome, Rakesh. I try to do it as often as I can. It's a termination condition now, PFI. It is no longer a target. It's already been reached. So now the only thing that you can do is make the decision on whether or not you're willing to trade into a termination condition. And if you're brand new, it doesn't fit your rules. Does that make sense? So now let's play if then. What has to happen, guys? If small triggers break the area and large triggers don't, well, then it puts me in a 50-50 scenario. Or if resistance holds and I get a full reversal, I'm going to look for odds favorable momentum to get me down to that area that they couldn't get to previously. Does that make sense, everybody? Guys, I love chart reading, and when you're a chart reader, you'll be freaking amazed at what you can say about the market. But look at that, to the tick. If you don't believe in Fibonacci yet, you're just not looking, are you? Terminations for the win, guys. Isn't this the same lesson that I teach every morning? Guys, isn't this the first 30 minutes every stinking morning? Oh, Safia, I hope you feel better. So how many times do you need to hear it until you believe it? How many times do you need to see it until you believe it? And it's okay if it's one, if it's 1,000, it doesn't matter. I'm going to be here with you, start to finish, guys. I'm going to be here with you. I don't have a triple divergence trade set up. PFI, I don't even know what that is. What is triple divergence? Give me one word to describe what triple divergence means. It's a termination. So do I have any trades that require a termination? I have trades that require the absence of a termination. Ooh, counter trend trade. Let me give you a copy of the bestseller, PFI. How to Commit Financial Suicide. Trading against strong triggers, trading in determination conditions. That was a termination condition. How did that counter trend trade work out? Got your ass kicked, didn't you? That was a termination condition. If you got in at the red line, you got your ass kicked again. I don't trade the smaller chart. I take the advantages on the large chart, PFI. No, it wouldn't have. You only had two, right? You didn't even have three divergences. PFI, this is the, where do you see three? Help me out. 1, 2, 1, 2. Let me count them again. 1, 2, 1, 2. 1127. Three divergences help me identify change on the large chart, right, PFI? Large chart said down. So where was your trade? Where was your trade? If that's what you want to do, go ahead. But why the hell would you go counter trend trade directly into resistance with every trigger down in a downtrend? Because a small chart that doesn't even give the overall temperature of the market said that it might push up. Does that make sense? In PFI, this is one of the biggest challenges, is you're going to look at this right here, and you're going to go, that was my money. I don't have rules for it, but that was my money. And let me give you a little heads up, is that if this right here, if this pivot was a termination, if this reached Fibonacci support and didn't break, and this was an actual termination, PFI, That's your trade right there. But since this isn't coming from a Fibonacci area, the likelihood of success goes down exponentially because your large chart still says down. Does that make sense? This is what John teaches. That close above the small triggers right there is chock full of kick-assery to get you to the next area, if this is a termination condition. But since it's not, it's just a little bit of silliness. Here's an area that holds. The triggers don't break, right? So now 1, 2, 3 divergences. Check it out. PFI, the trend is still up, but there's that same look over here, and that's the one that goes down. Does that make sense? That's next. That's when you have the repetitions to discern whether or not it's a termination condition or whether it's a pivot in the middle of nowhere that you're hoping is going to reverse the market. Price reaches support. All of the trigger lines are above, right? I can't go short yet. Large triggers are up, small triggers are down. I don't have momentum. My large chart says, Mark, I don't know if we're going to break through this area or if we're going to continue up, but it does say no more shorts, and it says don't try a long. Do you see how that works, guys? This is not my money. This is the look that gets me tased, that gets me hogtied. Crude's putting on a great lesson right now. And it went right up to Fibonacci resistance, right? From the bad bottom. Didn't we have a circle down here at 23? Didn't we say when a bad bottom, look at this, bad bottom, Fibonacci resistance makes the next fib. Bad bottom, Fibonacci resistance makes it to support and then goes up. Bad top, down to support, retest resistance. So now what I'm doing is I'm looking at this and I'm saying this termination condition happened after a bad bottom. Price loves to finish the move down here. So if I get an opportunity, a rules-based opportunity to look for a short trade, I can't freaking wait. We'll see what happens. Does that make sense? So Rakesh, the overall is down, right? But the market fluctuates. So we can take that in the moment look. And we can say, all right, let's just be patient, right? Let's just look for a little bit. And guys, Ron C says with this much momentum, PFI, there's that little snippet, that little 5, that little 10 ticks right in there. That little $100 money grab, boom, boom. Sets up as a momentum style trade off the 1-to-1s, makes it right to Fibonacci resistance. When you grow at the software, that's a kick-ass trade. But if you don't understand momentum, if you don't understand a clear path, it's a trade that relies on momentum. And if you don't understand, I don't have any PFI. You're going to have to learn to read your charts and make some. Because I'm not going to hand you a loaded weapon for you to blow shit out until you understand momentum and termination conditions and the conservative entry that gets you paid. Because guys, if you come in here as a brand new user, you try to catch everything, and you screw everything up because you don't learn the lessons, well then Nexgen sucks, right? It has nothing to do with your ability to follow rules. I give you everything that you need to be successful, and from that successful platform, you'll grow into other trades. You'll see patterns so many times that it becomes amazing. Guys, look at this. Termination, full reversal, odds favorable. So PFI, let's keep it in the rules book. Do I have any areas inside of favorable large triggers yet? Not yet. But can we play the if-then game? This termination's already created a full reversal. This full reversal's already given me odds favorable momentum. This odds favorable momentum is pushing the market down. I have a mid band, but my large triggers are up here. We've got a fib, but my large triggers are up here, all the way up by the reversal bar marker. But they come down more, right? And look how it's starting to come together. Do you see it? Odds favorable. It's 50-50. But do you see how that little bit of patience, it's starting to come together. Ron made $100 right here. But that's not our trade yet. So we're just waiting. The triggers are coming down. The mid band's coming down. This is coming down. I am, how many ticks difference? 2.5 ticks between the two. Is it inside of favorable large triggers? What if we get a pullback and these large triggers keep coming down? 74, right? Then it's a go. Do you see how easy that is? Are my rules met? No. Damn it. Not yet. But we're anticipating, we're waiting, we're getting close. There's a reversal bar. Some of you might say, with this termination condition, with this reversal, with this momentum, with everything down and no divergence potential, if I do get in at resistance, where does my stop have to go? Somewhere up here, right? Above those large triggers. That's a lot. So we'll see how that one plays out. But guys, this was a great example. Opinions get run over. Rules typically work out pretty well for us. Absolutely, Rain. And I'll make sure that John puts it on there. But guys, 82.23, we circled back at 11:15-ish, right? 83.55 yellow line. Help me out. Right there? That's the reversal bar marker. PFI. This is the point at which this bar becomes a down bar. And on your large chart, this is the point at which this bar becomes an up bar. It's called a reversal bar marker. Great question. I use it to gauge that gap theory. If my large triggers are above the reversal bar marker, then the gap theory is in place. Then price is likely to retrace and pull back. How did we do today, guys? That's pretty much the class. E, is it becoming a little clearer as you move forward? Craig, is it getting a little easier? Jason, reckon yourself? Every day is a little closer, right? Andrew, Ty, Stock Chip, T. Copeland, Michael, Trader Rick, Ligarius. Every day it's going to get a little easier. Every day your recognition is going to grow. Every day you're going to find yourself, ooh, that's a cool picture. Every day you're going to find yourself just a little bit smarter. Rakesh, because this is an education room, whether or not I'm in the live market depends on whether or not you guys are giving me pictures to talk about. I won't ignore people's requests for help through pictures and just study a live market. Termination, guys, look at the bounce. Hey, PFI, look at all of those divergences. But the damn thing didn't go up, did it? Momentum won. Do you see it, PFI? 1, 2, 3, 4. 5. Large chart wins. Rakesh, I will every time I'm able, I promise. Clear path without all the momentum, sacrificing momentum, still have an area inside. Did you see those divergences though, PFI? I'm always correct, except the times I'm wrong. Well, that was a different market. What do we think about this one? We are 2 ticks from those large triggers. Are you guys good with 2 ticks? I am. I'm good with 2 ticks. But if you're not, relax, right? Because now it's inside of favorable large triggers. Are they going to come back for us? It's still 50-50. I don't know if this area is going to break. And if I'm a tick or two below, and there's my large triggers right at resistance, there's my odds favorable, there's my termination that created a full reversal, there's no divergence, there's strong triggers. Do you see how that works? The only thing that I'm sure of is that my rules were met. I'm 2 ticks below the area inside of favorable large triggers. And guys, it looks like this one's going without me. That's okay. Give me a Y in the room if you see the setup. Termination creates a full reversal. Full reversal gives me odds favorable. 50-50. No divergence. Now we have areas inside of favorable large triggers. But for me, PFI, fibs are an area. Tick above, tick below, right? That is so stinking close that with these conditions and these advantages and that look, I'll take that one every time. Well, at this point, look how far your risk is. If you didn't take it right here, that was your chance to get back in. They gave you one little shot right there. What if it bounces back now and there's no divergence? Are your rules still met? Can we say, now they're right inside, right? Now I still have rules met. So if this one didn't get me, what are we doing now? We're doing the up dance. We're like, please give me just a couple buyers, fighting momentum, fighting trend. Give me a couple of those yahoos that don't believe in momentum. Oh, that's okay. There's your first fluctuation. I can still do this. Guys, I have followed trades 20 points before. Now it's just getting better on the large chart. It may come back, it may not, but the rules are met. I have literally taken sell orders and gone, missed me, damn it, didn't work, holy smokes, oh my gosh, is it going to get me? For like 20 points. Just waiting because my rules were met, because that's my only option, guys. My only option is rules met or rules not met. So this is the class every day. Post your pictures, get your feedback, ask your questions, get your clarity, rinse and repeat until it becomes easy. Guys, great questions today. Thank you for being here. Thank you everybody that posts. Thank you everybody that asks questions. Um, I'm going to be back tomorrow morning at 9 a.m. We're going to do it again, over and over and over again. I will not leave you guys. And as long as you're putting the work in, I'm going to work twice as hard to get you where you want to be. So I'll see you guys tomorrow morning at 9 a.m. If your rules are met, take a trade, take a picture, bring it to me tomorrow. Hope everybody has an awesome afternoon. I'll see you guys in the AM. Take care, everybody. Be good.